In the eye of the geopolitical storm, there are always certain assets that become safe havens and bargaining chips in turbulent times due to their irreplaceable strategic value. In 2025, as trade frictions escalate and supply chain security anxieties spread, rare earth, this industrial vitamin that was once overlooked by the market, is stepping onto the center stage of the investment world like never before. It's no longer just a family of metals on the periodic table. It's become the focus of great power competition, the core of national security, and the target of capital pursuit. Behind it lies an interwoven grand narrative of policy drivers, technological breakthroughs, and capital layout, presenting us with a unique window to observe the future industrial landscape and investment direction of the world. Hey everyone, I'm Daryl Hart, your wealth strategist. This video, we're going to use MP Materials, a rare earth industry leader, as our main case study to dive deep into the rise of the strategic resource industry, its financial health, investment logic, and potential risks, providing investors with a comprehensive guide to navigate through policy cycles. Rare earth elements, or REE, are a collective term for 17 special metallic elements. They're not actually rare, but the separation and purification technology is incredibly complex and difficult. They're the vitamins of high-tech and defense industries. From electric vehicle motors and wind turbines to smartphones and F-35 fighter jets and precision-guided weapons, you can't do without them. In the strategy for domestic control of critical minerals, MP Materials plays a core role. It's not just the operator of Mountain Pass Mine in California, the only large-scale rare earth mine in production in the Western Hemisphere. It's a symbol representing America's determination to rebuild strategic supply chains. Its history isn't simply a corporate development story. It's a thrilling game involving investment insight, national strategy, and geopolitics. To understand MP Materials, you first need to understand its core asset, Mountain Pass Mine. This mine was operated by Molycorp and was once the world's leader in rare earth supply, meeting most of global demand. It has excellent geological conditions and is rich in high-value light rare earths, especially neodymium and praseodymium, the key elements for manufacturing permanent magnets. From the 1980s through the 1990s, America was the absolute global leader in rare earth production. California's Mountain Pass Mine was the world's most important rare earth source. However, due to high environmental compliance costs and unfair competition from China's cheap rare earth, America's rare earth industry rapidly declined. By the early 21st century, Mountain Pass Mine closed, and China gradually came to control nearly 90% of the global rare earth supply chain, creating a situation where the Middle East is oil and China has rare earths. In 2017, investment firms JHL Capital Group and QVT Financial purchased the bankrupt Mountain Pass Mine and established MP Materials. They successfully acquired the core assets of Mountain Pass Mine from bankrupt Molycorp at a competitive bid price of $20.5 million. At the time, this deal looked like a massive gamble because the global rare earth market was still dominated by China, and reopening the mine required enormous investment and navigating unknown technological and market challenges. After 2018, the US-China trade frictions and tech competition completely elevated rare earth self-sufficiency to the height of American national strategy. In 2020, the Trump administration signed an executive order designating rare earths as critical minerals and launched support under the Defense Production Act. That same year, MP Materials chose to go public through a SPAC, a special purpose acquisition company, which was getting a lot of attention back then. They merged with Fortress Value Acquisition Corporation with a valuation of around $1.5 billion. This deal injected MP with approximately $545 million in cash, including private investment in public equity investments from prominent investors like hedge fund D. Shaw. After going public, the original shareholders, JHL, QVT, and others' equity converted into public company stock, while the SPAC sponsors, PIPE investors, and public shareholders jointly held company shares. This move made MP Materials a focal point of capital market attention, allowing the company to tell its story directly to public investors. In 2022, the Biden administration passed the Inflation Reduction Act (IRA), which provided massive subsidies for domestically produced electric vehicles requiring critical mineral domestic content ratios, awarding MP Materials a grant of $35 million to build its downstream rare earth separation facilities. This wasn't equity financing, but it demonstrated the nation's capital's recognition and support of its strategic position. From bankrupt ruins to a multi-billion-dollar public company, MP Materials' transformation perfectly illustrates how to combine geopolitical demands, national strategic will, and capital market power to ultimately reshape an industry critical to national security. Of course, to judge a company's value, we can't just listen to the story, we need to look at the data. So let's analyze some of MP Materials' core financial metrics from their Q2 2025 financial report. And if friends are interested, next week I'll teach you how to analyze corporate financial reports. MP Materials posted Q2 2025 revenue of $57.393 million, up 83.6% year over year, with most of the growth coming from new business segments. The Magnetic Materials division generated $19.861 million in revenue, representing 34.6%, which is new business revenue. The Traditional Materials division brought in $37.532 million, representing 65.4%, down 51.4% year over year. The change in revenue structure reflects the actual progress of the company's strategic transformation. The intentional contraction of traditional rare earth concentrate business, down 51.4% year over year, is the result of the company's active adjustment aimed at reducing dependence on the Chinese market. Meanwhile, the rapid ramp-up of the new magnetic materials business shows that the company's downstream expansion strategy is actually being implemented. In the first half of 2025, capital expenditure was $59.473 million, down 39.5% from $98.326 million in the same period of 2024. Among these, capitalized capital expenditure for property, plant, and equipment was $66.2 million, down 31.1% year over year. Depreciation expenses were $37.26 million, up 24.2% year over year. The sharp contraction in capital spending indicates the company is adjusting its investment pace, shifting from rapid expansion to refined operations. This adjustment could stem from two considerations. First, dealing with the current higher financing cost environment. Second, waiting for the new business to generate stable cash flow before pushing forward with subsequent investments. The growth in depreciation expenses reflects that the assets formed from earlier investments are now entering the amortization period. The net loss in the second quarter was $30.872 million, narrowed by 9% compared to $34.055 million in the same period of 2024, indicating a negative gross margin. The Materials division had adjusted EBITDA losses of $12.678 million. The Magnetic division had adjusted EBITDA profits of $8.089 million, with the division generating $19.861 million in revenue, with a gross margin of around 40.7%. The loss narrowing benefited mainly from improved profitability of the new business. The Magnetic division achieved positive EBITDA early in production, showing this business has good profit potential. Currently, this money is being fully invested into the next target, building their own rare earth permanent magnet factory, with the goal of creating a complete industrial chain closure from mine to magnet. Because of this, their free cash flow will face periodic pressure. As investors, we need to pay attention to management's ability to control capital expenditure and the cash flow conversion efficiency after new projects come online. From the financial report, we can see that while the company's new magnetic business is already profitable, it hasn't yet completely offset the decline in traditional business. But MP's stock price surged more than 500% after the first half financial report came out this year, and the market cast a vote of confidence with real money. So why can MP Materials create this kind of data? Looking at it from the company's own strategic level, the first thing is the company successfully transformed. Back in Q1 2025, traditional rare earth concentrate sales still dominated 85%, but by Q2, high-value separated rare earth oxide product sales skyrocketed to 55%, for the first time overtaking concentrate. The revenue structure underwent a landmark shift, showing the company has successfully upgraded from a mining enterprise to a high-value materials manufacturer with significantly expanded unit product profit margins. Currently, MP Materials' business model is very clear: mine rare earth concentrate and sell it. Second, the company stepped up tech investment. Traditional mining companies typically don't invest heavily in R&D. But MP Materials is different. It's essentially a resources plus technology company. Its core strategy is to establish a complete industrial chain from extraction to separation and even magnet manufacturing. Therefore, its R&D expenses have increased significantly year after year. This investment is aimed at mastering high-purity rare earth separation technology, breaking through technological barriers of other countries, which directly relates to its long-term value and further margin improvements. Finally, because MP is the kind of high-growth, high-investment phase company, the price-to-earnings ratio, PE, is actually temporarily distorted. Price-to-sales ratio, PS, and price-to-book ratio (PB) are more appropriate valuation anchors. What we as investors focus more on is its value realization pathway. The current market cap mainly reflects the discounted cash flow of its mining business. Once the separation plant reaches full capacity, its valuation benchmark will switch to a chemical materials company. If the magnet plant comes online in the future, its valuation will further align with high-end manufacturing leaders. Each successful downward move in the value chain could trigger dramatic valuation expansion. From a macro perspective, MP's stock price shows event-driven, pulse-like characteristics. Its core driver is not simply supply and demand, but deeper logic. First, it's affected by short-term events and sentiment. That is, US-China relationship news, tariff rhetoric, and so on, bringing pulse-like trading opportunities. Every time US-China relations tense up or tariff rhetoric escalates, it immediately triggers market anxiety about supply chain disruptions and capital rushes into strategic resource sectors like rare earths as a hedge. Second, there's the midterm policy and industry driver. The IRA Act and the National Defense Authorization Act (NDAA) form the policy floor for midterm development, creating a protected incremental market. Back in early June of this year, the U.S. Department of Defense and Apple respectively invested $400 million and $500 million. The Defense Department's deal is particularly noteworthy. MP has already signed a decade-long strategic agreement with the Defense Department. This contract not only sets a price floor of $110 per kilogram for its core product, neodymium praseodymium NdPr, which is almost double what China is currently quoting, it also commits to having first right of purchase on the output of its future 10x magnet factory. What does this mean? No matter how market prices fluctuate, MP's revenue has a floor, orders are guaranteed, and cash flow stability dramatically increases. It's the absolute core of rare earth self-sufficiency. Not just that, the Inflation Reduction Act (IRA) is the hidden hand. The act requires electric vehicles to meet critical mineral domestic content ratios to qualify for subsidies, which creates a definite, protected domestic market for MP's future separation products, keeping them safe from price competition with products from other countries. Finally, there's the long-term value driver, enterprise scarcity. MP's resource scarcity, the value appreciation brought by vertical integration, and the demand inelasticity from global green transition jointly form the foundation of its long-term value growth. Today, the global green energy transition, electric vehicles, wind power, is creating a long-term upward trend in demand for high-performance rare earth permanent magnets. Right now, separation capacity outside of China is extremely limited. Once MP Materials successfully ramps up separation product production, it will enjoy massive supply-demand gap dividends. The current stock price mainly reflects its mining value. Once its separation plant reaches full production and realizes magnet material sales, its unit product value and profit margins will surge dramatically, potentially ushering in a Davis double play. But precisely because of this, rare earth price volatility is intense, and its price risk doesn't just come from the demand side. There are multiple factors to consider. For instance, whether China might engage in strategic price suppression to maintain market share, which could cause global rare earth prices to face long-term downward pressure at their core, or whether global economic recession could cause downstream demand to sharply drop temporarily, and even with tight supply, prices might crash significantly in the short term. MP's high margins are built on current high prices, and its sensitivity to price fluctuations is far higher than the market imagines. Of course, policy as its biggest safeguard could also become a risk. If American policy shifts in the future, or if US-China relations significantly ease, its political premium could quickly evaporate. Moreover, the jump from mining to high-purity separation is a massive technological leap. If its separation project faces production delays, cost overruns, or product purity fails to meet standards, it could seriously damage market confidence. And rare earth extraction and separation come with serious environmental challenges, wastewater and tailings treatment. Any environmental incident could trigger regulatory intervention, reputation damage, and operational disruption. Currently, MP's valuation already incorporates the market's extremely high expectations for its future vertical integration success. If its separation or magnet projects fall short of expectations, or if global liquidity tightens causing growth stock valuation frameworks to be revised downward across the board, its stock price could face enormous pressure from valuation compression. High expectations are both fuel for growth and traps for pullbacks. Investors must be vigilant about valuation risks. Actually, after analyzing the rare earth industry, we can see that currently, the valuation factors of many industries far exceed the scope of a single company. It reveals a brand new investment paradigm under the current macro environment, shifting from globalized efficiency prioritization to regionalized security prioritization. MP Materials isn't an investment suitable for everyone. Its high volatility demands investors have a strong risk tolerance. When building our investment portfolios, we can classify MP Materials as a growth asset. It's different from stable index fund core assets, and it's also different from speculative cryptocurrencies, satellite assets. It's more suited to serve as the core within satellite assets, used to hedge against global macro uncertainty and capture excess returns from industry upgrades. Investors should adopt long-term dollar-cost averaging or rebalancing strategies to smooth out its high volatility, avoiding emotionally driven trading based on short-term events. Its true value needs to be realized over a 5 to 10-year industry cycle. Investing in rare earths is investing in a more fragmented, more cautious, and more resilience-focused future world. Its story is only just beginning. If you're feeling confused about the current market and macro environment, if you feel this analysis has provided some inspiration, you're welcome to subscribe to this channel and turn on the bell notifications. I'll provide you with every week in-depth analysis of the latest macro events, actionable wealth strategies, everything from asset allocation to risk management and beyond. Let's together build a more resilient wealth fortress in this complex market.